Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, national underwriter for Old Capital. Joining me today would be the man himself, the governor of the great state of real estate in Texas, Mr. Michael Becker, but he is on another due diligence assignment. And so in the podcast, we have the man himself, Ricardo Hinojosa with Old Capital. Ricardo, how are you?
Doing fantastic. It's good to be here.
Ricardo is a loan officer for Old Capital, been with us a long period of time, very knowledgeable about putting multifamily transactions together. So we're excited to kind of talk, keeping in the theme, what I'm talking about these days is really going from 0 to 1. And in the podcast today, we have just the right husband and wife couple that have gone from 0 to 1 in their multifamily business. And they're going to tell a little bit of the story about how they did it, maybe how you should think about doing it if you want to get into multifamily. I really wanted to kind of talk a little bit about their journey, what they saw, what they did. Did they go books on tape? Did they join a mentoring group? How did they raise money? So we have in the podcast, we have Matt and Melissa. Matt and Melissa, how are you?
Doing great.
So thanks for being on the podcast. I'm going to turn it over to the man himself, Ricardo. Ricardo, go ahead, please.
Thanks, Paul. No, it's a pleasure to be here with Matt and Melissa Mettry. So I've had the great opportunity to work with these two, known them for a couple of years, and they've done a great job of, like Paul said, going from 0 to 1 here recently, but it wasn't overnight. They've been working on this for a little while. So you two, why don't we start off on just a little bit about yourself, your background, and we'll go from there.
I'm Matt Mettry, and we moved to Dallas about 11 years ago from Birmingham, Alabama. My company transferred us here. I was in the hospital space at the time and moved to Dallas, was working in downtown Dallas. And prior to that, I'd done several things in my career. I actually was an Army officer right out of college in the Medical Service Corps, and that was my foot in the door in the healthcare space, which I've been in most of my career. And along the way, we met a few folks. A gentleman that I grew up with in Oklahoma City said, you need to check out this real estate investing group, and I met some like-minded folks and found out about multifamily investing. And we invested in several multifamily properties over the past 6 or 7 years, and finally got to a point where we thought we could do it on our own. And we reached out to Old Capital, who helped us out with that. So I'll let Melissa.
Well, I am a single family realtor, and I've been in real estate for, over 10 years. And since we moved to Dallas in 2014, I also was keeping my eye out on different properties and things like that when we kept thinking, well, we'll do single family. And we did find a couple great deals, but then we really wanted to get into multifamily. And so we just kept our eyes out. But I am a realtor in the DFW area.
So did you guys do any single family investing? Or
Yes.
You did?
Yeah, we have a couple in Dallas, and then we have one in Tulsa, Oklahoma. Those are great deals, and we got really lucky with them because we bought them at the right time. So,
and tell me a little bit more about that, because you sell single family homes. You've purchased a couple rental properties. You own a couple in Dallas, but you own one up in Tulsa, which is about 3-4 hours away. How do you manage a property that's so far away that's a single family? Do you have a management company manage for property? Do you manage at a distance? How do you call upon vendors to kind of work it out if you have let's God forbid, a hurricane, tornado go through Tulsa these days?
Well, we really networked with some people up there. I filmed the deal through a mutual friend. And so we we thought the numbers like really worked out for us, and we had to completely gut the house and renovate it. But we networked through our connections there to find a contractor. And then we found a really great agent in Oklahoma that I partnered with to find a tenant. And she actually kind of helped me find different things, like if we needed someone like an exterminator or, something like that, the different services. But we actually managed that ourselves from here. Thank God it's not much is not much has gone on, knock on wood, but it's been pretty easy.
How long have you owned that property?
Almost 2 years now.
Okay.
It's been a couple of years.
So,
We fixed everything in that house. So air conditioner, hot water heater, new roof, new everything. So I'm sure eventually we'll have some maintenance and some things to do. That's one reason we haven't had to touch it much last couple of years.
and how did you vet the tenant on the single family side? You're down here, they're up there.
Mhm.
How do you vet a tenant to become a tenant with you? What kind of criteria did you guys have?
Well, honestly, I partnered with that agent that someone referred me to in Tulsa, and she helped us vet the different tenants through her background systems. And then we just kind of used the rule of thumb that I use for all of my rentals, because I do a lot of high-end leasing in Dallas. I have like a checklist, and I just kind of put that to use with the Tulsa property.
You know the single family business from a lot of different angles. What made you start leaning to multifamily? What sparked your interest in multifamily?
Well, I think we had invested in 7 different properties over several years. And so we'd experienced from first getting the deal to getting quarterly distributions, those checks we put in our bank, and to selling the properties eventually. And so we saw the whole life cycle. We saw some success. We also noticed some things that we wanted to avoid when we eventually would get our own property. And over time, we thought that we could do it. I mean, a lot of great people who led these investments and managed them, and we got to know them and found out they're just normal folks like us, and they followed a plan and they got a certain outcome if they went through the steps and they were smart about it. And we thought we could do the same with the right partners in the right direction.
Okay. So you became a passive investor, a limited partner in multifamily deals through the mentoring group, the education group that you had mentioned.
Yes.
And what about those deals piqued your interest the most? Like, what about being a passive investor made you say, hey, we can do this?
If I take a step back, one of the reasons we jumped into passive investing is I had a job, I had a gig where I was going to Colorado every Monday, coming back on Friday. So I was gone the entire week. It was a little easier to be a passive investor when you're not in Dallas every day to look after properties. And experiencing that, the properties, we noticed how the lead investors, the general partners, would do certain things like clean up the property, fix the big things. There's lots of deferred maintenance. And when they went through those steps, they were able to raise the rent. And when they raised the rent on enough units and they did enough of the remodeling, the price, the value of the properties went up enough to where they were able to sell them and make a nice profit. And that all varies with where you are in the market. And we've seen a few different circumstances in the market over the last 8 years or so. And so that's really what attracted us. We thought we could do that same plan. Find a property that has rents that are under market, go and fix certain things and reposition the property and raise the income, raise the net operating income, and that equates to a higher value.
So I get this question a lot from folks that are wanting to get into the business about, hey, should I be a passive investor first, or should I just go try to buy my first deal? How did you approach the whole, learning as a passive investor? Did you kind of talk to the GPs up front? Hey, can I dig in a little more here, or can I go to due diligence? What types of things did you do to make sure that you were learning the business as an LP?
We did get to know a lot of these general partners over the years, and we helped out on several due diligence walks and learned a lot that way. I can tell you, at least from my perspective, there's just no substitute to learning until you have to close the books the first month or make sure you get the rent from everyone. So we learned a lot. I'm still learning every single day. And that first day, that first week, we probably learned more than we did over the previous 5 or 6 years.
Well, yeah, because you don't just have one person calling you about something, you have like a bunch of people calling you about something. And so it was just like overwhelming. But it was only that first week. And then after that, we were like, okay, we can do this. But I think like the single family rentals that we have, and then my real estate background has really helped us know we can do this. It's like one big single family home. And I don't know, you call one person for everything instead of, having to call people for different properties. So
you feel like the passive investing, because you guys were passive investing for several years, do you feel like, hey, we should have just gone straight in and done our first deal? Or do you feel like the passive investing was really beneficial?
I think it was beneficial. And like we were in some really great deals that we like to think these people are very helpful and they're great mentors and they taught us a lot. So I do think that it was helpful to be in a couple of different passive deals before we jumped right in.
Yeah, and honestly, it was sort of like the proving the concept in our minds. We didn't invest our entire life savings in our first passive investment, but we started small and we went through the life cycle and we got a nice return. And so we wanted to do more of that. And we knew what was possible, and we knew that that plan worked if it's executed properly.
Yeah. So Matt, talk a little bit more about the relationships you were able to build with the GPs that you invested in and how they've helped you on your first deal.
We've invested with 5 different GPs. There's one that we invested with 3 times, and we find ourselves calling him, texting him quite a bit. Things come up that we've never encountered, like a fire sprinkler inspection. And it's nice to have those relationships that you can call and this person has the experience. They've managed multiple properties over many years, and they know the best contractor or expert to call. And that really saves a lot of trial and error and hunting around for the right contact.
Excellent. So do we want to talk about this first deal a little bit?
Absolutely.
So I imagine it is the as you got into looking for the deal, you had your team built. Talk about the search for the first deal. How did it come about? How'd you find it? What attracted you to it?
Well, we had been looking for a while, like a couple of years, and none of the numbers were making sense to us. We kept doing all the calculations and nothing was making sense. And I actually found the deal myself on MLS, and it was just a property actually in Richardson area. And I told Matt, I was like, this is going to be a great one. And he was kind of skeptical. And I just kept going back. I was like, no, I know this is going to be a good one. We have to go and see it. We finally connected and the numbers were starting to work out, but it took us a long time to go through the search.
Yeah, let's talk about that just for 1 second, because you're in a place that you can get information from MLS, the multiple listing service, typically for single family properties, but sometimes every once in a while, you'll find a multifamily property that may be listed by a single family realtor for the benefit of an ownership that may not know anybody that sells multifamily properties. So that's probably a good benefit. And so every once in a while, you should talk with a residential realtor that has access to MLS and ask them about what is showing up. But the reality, Ricardo, how many transactions are really found on apartment buildings through MLS?
Not very often, especially in this market and probably most markets. But hey, it's Melissa had access to it. It popped up, and it worked in this scenario, but that is not super common. It is not common.
Yeah.
It's not too common at all. But let's kind of talk about this one transaction again. Been into numerous limited partners positions, so they put in some additional dollars into other people's transactions. Now it's time for them to go from the back of the airplane where they've been passengers in the airplane. They've cut their teeth to becoming captains and first officers in the cockpit. So you guys found this opportunity on MLS. It was a 12 unit property.
Mm-hmm.
How come you guys didn't decide instead of 12 units to do 50 or 75 or 100 doors on your first opportunity to be the captain of the airplane?
I wanted to start small. I wanted to start small and make sure that we got this one right so that the next one we could crush too. I didn't want to get in over our head. And so, Matt kept saying it needs to be bigger. And I was like, no, we need smaller, because I just wanted to make sure that we, were able to learn everything we needed to learn and, go through all the right motions and then do well in this one so that we could do another one.
So absolutely. Ricardo, talk a little bit about that, about people that start off with maybe a smaller footprint and then go from 50 to 75 to 150 doors. Talk a little bit about kind of things that Melissa and Matt are going to do right now.
Yeah, and I think that's a natural progression that we see. Usually people start off with single family, then go to a small deal like this, and then work their way up for a number of reasons. Could be, capital could be a reason. From our perspective as the lender, we want to see them progress and gain experience before they go into bigger deals. So even this deal, their first deal, they had one of their good friends and experienced GPs sign on the loan with them in order to get them agency experience. We can get into that a little bit, but there's a number of reasons why there's a natural progression, and some of it is just learning. And then there are other constraints like the lending side of it.
So that's a huge deal. What Ricardo was saying is that we've seen a lot of people that went from 0, instead of 12 units, they went to 300 units on their first transaction. So they were kind of learning on somebody else's money. They put a little bit of money into the deal. They were learning on other people's equity into this deal, and those have had problems. The way that Melissa and Matt are doing it is I would say kind of the right way of doing it. Starting small in the single family, then working your way up to a 12 unit in this case, and then working your way up to a 50 to 75, or even if they want to do 125. That's the natural progression in multifamily, is starting smaller and going higher. Now, some people can't automatically go up if they have the capital and maybe they have somebody else that wants to sign with them. You can do that. But personally, I kind of like what they're doing. Go ahead, Ricardo.
The 12 units, was this just you and your guarantor, or did you raise equity from others to do this deal?
We raised equity. We actually have 25 partners in this deal. And that was an amazing experience to raise that money and present the opportunity to investors, given all the competing opportunities in the market, the stock market or money market or other real estate deals. So we had to really put together a compelling, well thought out presentation, and we got a lot of help. I know Old Capital gave us some good insight for that presentation and supported us the entire way. And it was a long process. And once we got those investors' commitment, we did a private placement memorandum. It's an SEC filing. We had a SEC expert attorney helping us with this whole process. And every month I've got to send out financials, balance sheet, income statement, explanation of what's going on, good or bad, being as transparent as possible with these investors because they trusted us with their money.
That's fantastic. And these guys raised this money. I think you closed this past summer, June of 2024. So in an environment that it has not been easy to raise equity, investors in general have been relatively conservative. So talk about what stood out for this deal What'd you love about it? What'd your investors love about it? What was the selling point for these 12 units in North Dallas?
Well, honestly, I think it was the rate of return. We were trying to make sure that we got a property that had a rate of return that could compete with the money markets and the interest that they were getting on other investments.
Mhm.
And this one really stood out to people because it's in such a great location. It's 635 and 75 area with a great school district. And I think that those were key things that we were looking for when we were trying to find a deal. I wanted to be in a spot where we'd never have a problem getting renters. And actually, we've been 100% occupied since we have had the property. So, I mean, we actually had a waiting list last month. But I think that that's a big thing, right, Matt? The rate of return.
Yeah, that's very important. And I think a lot of these presentations to investors, they're all going to have a certain rate of return in the presentation. And I think we really did a good job of connecting the dots of this is the market rent and this is where we are right now. And on the good side, we have a small property, so it was fairly easy to explain how we could take the 12 units and over a year reposition the property and make the outside look a lot better, landscaping, paint, fix up the inside of these units, make them more modern, and get another couple $100 a month for some of these. I'll give you an example. Some units are at $1,300 a month rent, and we've transitioned those to almost $1,600 a month after fixing it all up and marketing it. And this property just was not that the previous owners didn't do a lot of aggressive remodeling and marketing to get new residents in at a different rental rate.
So let's talk a little bit about that, because let's create an image in somebody's mind that's listening to this. How old is the property? When was it built?
85.
85. Brick on the exterior of the property itself.
Mhm.
So, and pitched roof,
Yes.
individual HVACs, or is it two-pipe chiller, the small property?
Individual HVACs.
Like
Yeah.
townhomes, like also?
Yeah.
Exactly.
Exactly.
Yep.
Yeah. So if you were to drive by it, you'd say, this is pretty damn nice. And no wonder I want to live in something like this. And so do you know why the seller was selling? Because I think that's one of those dynamic questions you always have to ask is, was there a partnership dispute and they were breaking up? The guy was retiring. He wanted to get out of it. Sometimes they just run out of money and they've made enough money and they've owned it for 5 years or 3 years, but they're just done, or they want to go buy a 35 or a 40 unit building. Tell me, do you know any reason why the seller was selling?
This is one of many properties they had, and it was very small. They had maybe a 75, 100 plus unit property out there. So they didn't spend a lot of time on this 12 unit. And they had owned it for many years, and they made a good profit when they sold it to us. I think it's probably a combination of just too small for how big they were, and they didn't really want to invest more capital in this particular property.
And a lot of individuals or partners, they don't want to do it. They want to buy something larger and move on. Now, how do you manage a 12 unit property? Tell me a little bit about that. Similar to the way that you do Tulsa? Are you the management company? How does this work?
One thing that I think we really lucked out on this property is I can get there in 7 minutes from our house. So I know that's probably not possible for every property in the future, but I can get there quickly and I go frequently. And recently we've just been lucky because our partner that signed on the loan with us has many other properties and has a very big infrastructure and has full-time employees, and he has a maintenance man who helps us a few days a week. And that's been a big blessing for us. He's there right now helping us. We had a City of Dallas inspection and we had a great score, really high score of 96, but they still gave us a list of things to fix before a reinspection next Monday. This maintenance man is helping us fix that list and we still have to go and follow up and make sure it's done properly.
Give me 2 or 3 things that you guys did for due diligence, physical due diligence on the property. Before you buy it, you want to make sure, like a car, that the car actually runs, that there's an engine in it, there's tires in the car. What did you guys do for physical due diligence on the property?
We actually went and toured each unit, and we took a HVAC specialist with us. We had a roofer come, we had a plumber to check out the lines. We went through each unit to see what needed to be done and made sure that we weren't getting something that, was like a lemon.
No, 100%. And that's the way to do it. I'm going to turn it back over to Ricardo. Let's talk a little bit about what was important to Matt and Melissa concerning lending. What was it? Non-recourse, 30-year amortization, 5-10-year term. What was important? Ricardo?
Yeah, so I think we spent a lot of time understanding their long-term game plan. So these guys have been working through the education piece. They've been passive investing, building their team for several years, been looking for their first deal for a couple of years. And it was important to them that we kind of set them up for success over the next several deals. So this is not just, hey, let's find good debt for one deal. It was, how do we set them up to reach their longer term goals? So that's why putting them in something that was qualified for agency financing was important. So they had their team built. They had a solid group, solid guarantor, key principal. That has a ton of experience. So we're looking for a property that could satisfy that need of non-recourse debt. So we ended up here going with a Freddie Mac small balance loan that fit this perfectly. Again, this was a stabilized deal in a good location. It underwrote well. Like they said, cash flow day one. So it was perfect for the Freddie Mac SBL program. And then we tied into their business plan. These guys had kind of a value add picture for the deal. So we wanted a shorter term, a 5-year term to get them in and then give them flexibility on the back end. So again, this is non-recourse debt on their first deal, 30-year amortization, fixed rate, step down prepay, really kind of hit all the buckets from that perspective.
What would you add to that, Matt?
Yeah, I think the big thing is that it was non-recourse. And we looked at a lot of options given our first deal and appetite for risk. That was important to us. And also it was important to find a partner that would sign on the deal with us.
There's one interesting piece there that over the last couple of years, as we've gone through a little bit of a downturn in the market, it's tougher and tougher to find those guarantors that are willing to sign on the loan for a recourse deal. If this was back in 2019, 2020, there may have been more appetite to do a bank loan on this deal, right? Because we hadn't gone through that downturn yet. But now that we've gone through a little bit of a downturn, right now it is tougher and tougher, even on smaller deals where historically maybe we would have done a bank loan, right? You need a guarantor, you need to find somebody that's willing to sign recourse on that bank loan. And it's difficult to find that. So that's another reason why it was really important to get a non-recourse deal for this transaction.
And Melissa wants to sleep at night too, knowing that it's a non-recourse loan.
Oh, that's a big deal.
And it's a long.
It was a big deal to us.
So talk about you guys have taken over the deal. You've owned it for several months now. Talk about that transition. How were the first couple of weeks, and any big surprises since takeover?
You might laugh at me. I'd never seen a money order before.
So, what is this? This is a check. Yeah.
And we didn't know that the banks cash money orders. I mean, really. And so Matt's going all over town trying to cash money orders. We had to end that.
I'm an expert on money orders now, which serve a very important purpose.
No big surprises. We had a water leak.
I've built some good relationships with residents, and they give me a heads up when there's problems. Thankfully, it was on a Saturday morning, you get a text with some pictures of waters all over the place. And so I went there, and we actually had to call the fire department to come and turn the water off. And so that was pretty cool experience. They, have the sirens on, they come and turn the water off to the building so we could fix this gushing water broken pipe. And we figured that out pretty quickly. And fast forward to now, it's really, we have this Resman software to manage the property. So it takes a little time to figure that out and getting a lot better at that. And at this point, we're working with our key principal partner and exploring, are we at a point where we can do a distribution to our investors, which
Wow, that quick? That's
exciting.
Good.
Yeah. So
good for you guys. Good for you guys. That's wonderful. So in the handoff between the seller and you guys as being the new buyers, we talked a little bit about the fire department having to show up, and maybe you guys knew where the turn-off switch was of water. What are other things that you wish you asked the seller before you took the handoff?
Gosh, the seller had no electronic records. Everything was on paper. And so he was able to scan everything for us, but it was all kind of jumbled up, so that was difficult. But I mean, no big.
the seller was very helpful. We still are in contact with him and answer each other's questions that we have. We have to split up the tax bill whenever that shakes out. We're contesting that right now. So prorated, until we took ownership in August.
Because in 1985, when this property was built, it was built as townhomes, and they have individual tax records on each of the 10 or 12 different units. So you're going to get 12 different tax bills on that.
Yes.
Yeah.
And then you're going to have prorations based on the 12 different tax bills too. So you got to kind of have to figure that out. So tell me a little bit. I mean, you've owned this property for a little bit. Let's talk about next steps, next deals. What, I see Melissa watering at the mouth a little bit about once she masters this one and she feels confident. Is it 6 months from now? Is it a year from now? How big? I'm just going to, tap your thoughts about where do you think you see yourself in the next, say, 24 months?
I think our primary focus is to get distributions in return for our investors. And I think in 2025, first quarter would be probably a good time to start looking at some properties. And we're talking maybe up to $5 million purchase price. And because it takes several months to find a property and negotiate, and you're talking, it might be mid 2025 until we closed on another one, even if we start working and looking hard now. So that's our plan. We want to find a great property that has potential, and we can take our playbook and build on it and reposition the property and find some nice families that want a good place to live and get the market rent.
It's great. Ricardo, give me some little being at the sidelines and watching Melissa and Matt work on this type of a project together. What are some of the highlights in your mind that you could reflect upon for somebody that really wants to get into this business? What's your 2 cents?
No, I think from this discussion, hopefully people understand. And my biggest takeaway was how they approached it and building their team. If you think about it, you start off with single family, but then didn't jump right in and try to buy their own deal. They started investing with others and other folks that they could build a relationship with. And when you think about it, they invested with others, and then one of those GPs signed on their loan. They're able to leverage those relationships for property management, for knowledge, for a lot of different things that kind of put them in really good position, in a really good, safe position to be successful on this deal. So I think that's my biggest takeaway is how they built their team.
So Ricardo did a good job of kind of wrapping it up, but what is something that you think, Melissa or Matt, that people that are thinking about getting into multifamily, whether as a limited partner investing future deal with you or for somebody else, or trying to do their own deal, what are some of the maybe 2 or 3 takeaways that you think is important for folks?
You're not going to know everything before you do it. And you just have to build the relationships and get educated and get around folks like Old Capital, where they have a lot of meetups, and you can see like-minded folks and see what they've done, see the playbook. I mean, this is running a business. So there's no shortcut or silver bullet of just flipping a house. You're running a business, and the same skills and success metrics that you would have in really any industry, any business leadership apply to running a multifamily property successfully.
Melissa, anything on your part before we say goodbye?
I would just say location is key. When you're looking for a property, you've got to make sure that you're in the right location, because if you're not, it would be difficult.
Yeah, take that from a single family realtor that loves to say location, location, location.
Yes.
And in this case, it's definitely location. It's tied in to one of the great school districts in North Texas. So it's close to a fairly busy street, 2 large highways, some 635 and 75. So somebody that works in and around the area, lives at your property, can jump on the highway fairly quickly if they work in Garland or they work downtown in Dallas. So location, totally agree with you. Location is important. All right. So we certainly do appreciate the kind words about working with Old Capital. We certainly do appreciate that. Ricardo, thanks for your time and putting another great transaction together with us. Certainly do appreciate that. On behalf of Matt and Melissa Mettry, Ricardo Hinojosa, I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.